Yeah, the equipment here is very tech. I just hope no one walks in because they're like, what is he doing down here?
Hello and welcome to another edition of Tech Deck Karaoke. I'm extremely excited for this episode. Neeraj has joined us and he is going to bring us a new topic. We're always talking about technology, but in this case, we're talking about how technology meets retirement, meets savings and financial planning. We're talking about how technology can help you drive your retirement future. So this is a departure from how technology serves the IT team and the infrastructure, and it should be a lot of fun for me to try and hack through these slides. Neeraj, welcome.
Thank you very much. Excited to be here. It's a different take on technology and retirement.
It's going to be a lot of fun. Do you want to introduce yourself a little bit so everyone knows who will be speaking correctly to these slides in a few minutes?
Yeah, absolutely. Well, before we do that, I would say ladies first. Do we want to jump off to Sabrina, or did I?
No. We can do that. I don't usually do that because she spends the entire time beating me up. But okay, Sabrina, would you like to introduce yourself?
Hi, everyone. Sabrina Schaefer, CEO of Transformation Continuum, the resident Joe Onisick clowning expert. I am honored to be here. I can't tell you, Joe, how excited I am for today, mostly because I don't want you to take any credit for it. But Neeraj, very nice to see you. Very nice to see you.
Awesome. Well, I'm delighted to be here, and it's one of those fascinating topics, having moved from collaboration to security to fintech and talking about retirement, and how, as a technology person, I'm able to actually work on something that adds more meaning to people's lives, particularly in their golden years, is something that I'm excited about. My name is Neeraj Mathur. I'm the founder and CEO of SavingsOak, the next-gen retirement savings platform for small and mid-sized businesses.
Excellent. Welcome. And I want to draw out a point here because I love it. Like SavingsOak for you is really something you got to a point where you can take on something a little more of a passion project that has a little more risk than your traditional roles. And so this is something where you really believe in. Is that a correct statement?
Yes, absolutely. So having spent more than 2 decades here in the Silicon Valley, I have the distinct opportunity to go on and do something more meaningful with my life. And so coming out of the corporate America, to pursue and help people save for retirement. When I spoke with hundreds and thousands of people who have been saving for their 401ks, finding that they have little or less amount of money saved for their healthcare savings is what drove me towards building a solution. Lack of awareness, lack of understanding, and more importantly, not enough Americans are actually saving for healthcare. That's why I'm here, wanting to take the technology and my experience to deploy something that helps everyone around the country.
Excellent. Excellent. Well, I'm excited for this episode. We got introduced through a joint, very good mutual friend, and because we thought some synergy might exist for our companies to work together. But in seeing what the team there is bringing out to market, we absolutely love it. And while I've not seen this slide deck, I know I love what you're building. And so hopefully I can present it with some enthusiasm and a few things correct.
All right.
Yeah. Before you dive in, I think one of the key things of what we are building is that many people, even without you having looked at slides, it is so simple and resonates with everyone that I'm confident these slides are going to make a lot of sense to a lot of people.
Excellent. Well, that sets me up for failure just perfectly. Thank you very much. All right. Without any further ado, I think we can go ahead and get those slides up.
Maybe we can, maybe we can't. This is why we need Julia. Give me a minute. There we go. All right.
Our producer is out sick for this episode, so we're going to have some technical challenges here on the back end. Never let your CEO run the video studio.
No, that's a terrible idea.
All right. So SavingsOak is the retirement savings platform for small and medium mid-sized businesses. So this is a retirement savings platform. It is a technology platform driving that. And let's talk through exactly what they're bringing to market. So first, we're all familiar with the pain of healthcare costs and the healthcare coverage we get with that. Those costs are obviously not going down. They are increasingly rising over time. 62% of individual bankruptcies are related to medical expenses. That's a huge, scary number. That's what happens to you with or without insurance when big things happen that aren't properly covered. There is 320,000 is the amount required for an average retiree couple towards medical costs alone. That's an astronomical number. That's a home in a nice area for just medical costs. And then 22% of the US population is over 65 years old by 2050. These are all people that are going to be very much at risk or needing these services. So when we look at how this is affecting the small and mid-sized businesses, there's a 40% expected increase for the premium cost for employers. This is not just costing your employees more money, this is costing you more money. And so it's something that has to be looked at so you can maintain and grow those employee benefits without bleeding that bottom line dry. There's huge costs per employee in 2021 and moving forward, and then huge loss in productivity due to the financial stresses that this all comes on. I can attest to the fact that when I am extremely financially stressed, my productivity in anything I do drops. And that goes from my personal life to my work life. They both balance out at bad. So it's not just the costs, it's the complexity of all of the different things going on for these employers. Everything from benefits administration to reporting and compliance, the education of employees on their benefits, to the employees sitting there with that choice paradox. I know that every time I've started a new company and I've gone through the onboarding packaging to select all my options, I'm mainly just clicking boxes or checking check boxes because I have no idea what I'm doing. There's not enough information on it. And at the end of the day, I don't have time to figure it out because I have a job I just got hired to do. So all of this creates a complex environment that leaves us as the employees not getting the benefits packages we need or not utilizing the benefits packages to its full extent. And for the employers, it's just astronomical costs and complexity that they have to try and rein in on behalf of their employees. So here's the question I want to ask here is, if you've got the greatest benefits package in the world and your employees don't know how to properly utilize it and get the best out of it, do you really have the greatest package in the world? So here comes health savings accounts, and this blows my mind. The health savings account can be used as both your health and medical coverage, but also as a retirement vehicle. And this is one of the things Neeraj and his team are bringing together here, is to be able to truly utilize that HSA, which is going to create tax advantage accounts for both the employee and on the back end create monetary benefits for the employer. So it's a win-win situation where the employer gets to save costs while the employee gets to save on taxes. You can earn investment returns on these. The funds can be used for qualified medical expenses, or anything that isn't used for those qualified medical expenses can be invested to work towards that retirement. And this was the part when I first started talking to Neeraj about this that blew my mind. I thought an HSA was a bank account that if I didn't spend it on my medical care this year, it went away. And if I got really lucky, I got some sort of visa that was only limited down to medical expenses. But apparently there's a lot more back behind that that can create an advantage for myself and my employer. So what's the benefit to the employer? Why does your employer want to offer this to you? Or why do you as an employer want to offer this to your employees? First, you can reduce the healthcare premiums, reduce those costs that you're paying for your employees. You can lower payroll taxes because of the tax advantage status of that HSA. You can create tax-free contributions and build a new recruiting and retention tool by offering your employees a better or new retirement vehicle while covering for those medical cares and those rising medical costs that we just talked about. So it creates both a benefit to the employee, making that retention of employees easier, but also a direct monetary benefit because of the tax advantages. To your employees, what do they get? They get the triple tax savings. If you can save taxes once, that's great. If you can do it twice, awesome. But this is the trifecta here. Triple tax savings. You're earning interest on these deposits. So it's not just money sitting there waiting for you to spend on qualified medical expenses. you can also invest that money. And so another mind-blown point on this is that HSA money doesn't have to sit in a low interest or no interest account. It can be invested in a multitude of fashions to allow you to actually get those returns so that when you do retire, you're not sitting on money that's worthless because of inflation. It's got multiple uses for how you utilize it, from that medical care to that retirement savings, and the ability to have it, that flexibility within it, so that you're covering for both of the inevitabilities. You're going to have medical costs, and at some point, you're most likely going to stop earning direct income where you need that retirement savings to live off of. It's portable, and I love this. We're not in a world where I sign up for a company and I'm there for 30 years until I get a gold watch and a pat on the back. People move between jobs. As we move between jobs, we want to know that our savings, our retirement, our cash is all transportable with us. And this plan allows for that. And then it's a reminder here that this will lower your taxable income, therefore lowering your overall tax burden, providing one of those triple tax savings. So why SavingsOak? SavingsOak is the first investment-focused, native, intuitive HSA platform. And I read that off the slide as fast as I could to pretend like I wasn't reading it off the slide. But what they're looking at is using that HSA as a true investment platform to allow you to use it for that dual purpose of qualified medical expense and that future retirement savings. They're eliminating a lot of the artificial constraints and limited investment offerings of traditional portfolios of benefits that employers are providing in that small and mid-sized business range. SavingsOak, retirement savings platform. It's a novel way to utilize your HSA to gain tax advantages, have a better benefits package and retirement savings, while it's also a novel way for your employer to reduce their tax burden, increase their profitability while offering advanced compensation packages and benefits packages to their companies that are competitive with other companies. And that is SavingsOak, I think.
All right.
Wow. That was very well done. I mean, I tell you,
and here's the question. Sabrina, are you buying?
Okay. All right. Listen, hear me out. Aside from the performance that you just did, Joe. No, honestly, it's very surprising when you really unpack what all of these misunderstandings, these myths, and then really understand what you can do. It's really impressive and really mind-blowing. So I will give you that. Neeraj, I think you're going to do much better. But I will say, Joe, you did pretty good. I'll give you that. You did pretty good.
I get an I think that's one of the things I've always loved about the conversations we have with Neeraj is he's not just out there selling his platform and putting this out there but he's also educating people on the options they have. I literally had no idea what an HSA is, and I'm fairly financially illiterate, but I bet I'm not alone in that boat of having no idea about a lot of these things. So I'd love to hear it explained correctly with that slide.
Yeah, no, I'm happy to. And I think you touched on a couple of things which are very important right at the top of this, right? And I talked about where I'm coming from. The notion so many people have about this is the disconnect and misunderstanding between the very core two things that are out there, right? FSA, flexible spending account, use it or lose it. That's the FSA model. And the health savings account. So right from the S, there is a spending in FSA and there is savings, which is in HSA. And it was quite surprising to me when I was looking and talking to people who were putting money away for retirement, that most people weren't really, particularly in the small and mid-size segments, that spectrum of population in the United States, they're not really all putting money to go buy beach houses and whatnot. They're looking for an ability to be able to afford healthcare when they retire, because we all know, or we've been told for the years, that Social Security benefits isn't going to cut it all the way out. As a matter of fact, spoke with somebody else last week, and she pointed out that her entire Social Security benefits check is actually going towards Medicare. And then so I asked, it's like, well, so how do you do other things? It's like, actually, I have other arrangements to be able to do that, because guess what? Social Security is not enough to cover. So that's the opportunity. That's what we are at SavingsOak, and I am trying to do with my team to be able to raise awareness, help more people look at it. So yeah, I can dive into the SavingsOak deck and give you a perspective of how I present it, or I attempt to present it to folks articulating our value proposition. So we talked about retirement savings platform. And there are so many different things. When we talk about retirement savings, most people, first off, is like, oh, 401k. And we have kind of, over the last, since late 70s, it took 401ks also 17, 18 years to become mainstream. And I believe we are at a very similar juncture for HSAs as well. It's not hidden from anyone that healthcare costs are rising, right? Every year, particularly for an SMB, as a business owner, you're looking at your healthcare cost premiums, and they keep going up and up and up. And the other interesting factor of this is, particularly in the last couple of years, as you think about pandemic and what happened, most people, over 20 million people, lost jobs around some of this stuff. And they were worried about the facts like, oh, I'm not worried about losing my job. I mean, yeah, that's a problem, but I just lost my healthcare. And this is we're in a pandemic. How am I going to pay? Oh, and by the way, when you lose my job, yes, you give me the option of getting COBRA, but that is also not cheap. I have to be able to pay for my COBRA premiums. And when the employer is not chipping in with their side of the thing, with their contributions, this money is huge. It can range for a family of four from anywhere between $2,000 a month to $4,000 a month, depending on what kind of package you have. And suddenly now you have to make a choice like, do I pay for this, or do I pay for my rent, or do I pay for my food, or what am I supposed to do? We've actually arrived at a pandemic of healthcare costs, which should alarm everyone, and yet we are not prepared, right? And over 60% of our population is filing personal bankruptcies because of medical expenses. Medical debt pretty much means you're going to go down a path that you can't recover from, right? And Fidelity did this research. So these are not numbers made up. So Kaiser Foundation comes with some numbers. $320,000 is what Fidelity came up with and said that's what an average retiree couple is going to look at in their golden years, assuming 65 to 85 is an age cost. That is a remarkably large sum of number you need to have just to pay for your medical costs, keep aside the living and everything else. And this kind of thinking about, we are in 2022, 28 years from right now seems like a very long time, but actually isn't. We're looking at about a quarter of our population being retirement age eligible. And that's a huge number that we should worry about from a society standpoint as to do something with it. And if you keep moving forward, if you go to the next slide, what we're going to find out is, yes, that's huge, but the SMBs, which are, by the way, over 90% of our employers will qualify being a small, mid-sized business, they employ almost 50% of the total workforce in the United States. And they are looking at an approximate 40% year-over increase in their premium costs. So it's going up. Small businesses are getting squeezed on all sides. And this is one of them where, like, how do I come out of this? I want to provide the benefits, but at the same time, if my margins keep getting squeezed, I keep paying more, where do I go? What do I do? And $2,000, I speak with SMB owners day in, day out. Spoke with someone today who runs a furniture place with 9 employees in Midwest. And this person was like, I am now paying close to $20,000 a month for healthcare. And I was like, oh my God, how are you doing this? And how does it impact your margin? And there's maybe a special case. They have everyone has their own nuance and whatnot. The bottom line is large portion of that money is going in. And I think, Joe, you did a great job of pointing out, right? Productivity loss due to financial stress. When we are thinking about money, money is an emotional topic. For those who have a lot, they don't want to talk about it because too much. Those who don't have much, they don't want to talk about it because I don't have enough to anything. And anywhere in between, they're like, I really don't want to talk about my financial stresses, because you're moving in from your mortgage payments, to your medical payments, to everything else that you need to be able to live. And when you're thinking about all of that stuff, it does bear on your mind day in and day out and takes your productivity down. So that's where we come in and say, look, there is a solution out there. And let's figure out why, despite the fact that it's been out there for 16, 17 years, it hasn't been really taken up and not a lot of people are benefiting it the way it needs to. So if we go to the next slide, let's talk about the other complexities. And it is around, okay, I want to do the best for my employees. Well, wait a second. How am I going to take this thing called health savings account that comes tied with high deductible health plans? I need to worry about making sure my employees understand what these options are, because we've trained them in a certain way. We named it high deductible health plans that offer the health savings accounts. Well, you leave government to name something, guess what? They are not the best marketers that there is, right? They'll figure out something easy and make it complex. This was complex to begin with, so they make it even harder. But from an employer standpoint, particularly in this SME, what's happening is a lot of these people are dependent on their broker, somebody outside of their space to be able to help educate themselves and their employees on what's the right thing to do. All three of us have been in technology for a long enough time. Last time you thought about your benefits was probably in November of the year, because that's when enrollment starts, or probably the last day of the 30 days that you're given when you join a new company. Because guess what? It's very low on the priority. And then you're like, what did I do last year? What did I do last year? I did this all the time. I'll text my wife and say, what did we do last year? Oh yeah, let's just check this. I don't have time for this right now. We'll deal with it later. And later never comes when? Next year enrollment. And we're like, oh, last week. What did we do last time? And suddenly you find that you're in that paradox, not only from a choice perspective, but you're not getting the time, the bandwidth that it needs, because typically we've kind of made it an annual or within the first 30-day affair where you don't get a whole lot of time to process these things. And that's where that exacerbates the problem quite a bit. And I'm not sure at when I converted from looking at a menu of options of funds to fully comprehend what's a mutual fund, what's an ETF versus equity versus what have you. We've all got some sort of a retirement plan in 401ks. We look at that and we said, yeah, that looks good. That one looks good too. Or maybe call our financial advisor if we have one, or call somebody, sometimes worse, call a friend and say, do you know this? And the friend also has no idea. This is what I did, so we go ahead and go do that. So suddenly all of these things make it very hard for an employee to make a decision and for an employer to roll something out where they've rolled out a benefit, but they will go back and say, I did this, but nobody really utilized it very well, so maybe it wasn't the right benefit. Whereas they never really got a chance to meaningfully deploy the benefit and seek its full utilization that could benefit the employer as well as the actual employees. So in that healthcare benefits cost, let's enter HSAs. They're not new. I will say that again, they're not new. They've been around for 16, 17 years. The only reason is traditionally banks and credit unions, because it was supposed to be a bank account that came with investments, and we'll cover that a little in just a bit. They offered people saying, oh, you can put some tax-free money here. Oh, and by the way, guess what? You can actually use this tax-free money and keep spending it on buying, what do you want to buy? Do you want to buy OTC? Do you want to buy whatever it is that you want to buy? You can use this tax-free money. And they never told, or at least large portion of them never went out to explain to people, one of the key things about a health savings account is you can invest that money. And that investment over a period of time starts to not only just, the power of compounding kicks in, and that actually sets aside some amount of money for you in your retirement. So you're not just dependent on 401k, but you have other example in your other case in your golden years to be able to pay for your medical expenses. So HSAs are tax advantaged. One, they do accumulate interest like a traditional bank account would. But the key thing here is that you can invest that money, and that money can then be used either today or in retirement. And we'll talk about the today case in just a moment. Let's go to the next one real quick. So when you think about HSAs overall being so effective, well, why haven't employers really adopted it? We talked about employers needing to educate their employees on why this is useful for them. Well, why should an employer care? Because they are looking to lower their overall costs, period. So lower costs, better margins, better for everyone in the business. HSAs allows them to reduce their healthcare premiums straight off the bat. And any money that goes in, so one of the things that from a best practice perspective, I speak with on SMB owners all day long is, if you're spending, let's say $10,000 a month for your employees and paying for medical care, HSAs will bring it down significantly. What you can also do is you can take some portion of that savings and give it back to your employees as seed money. And that is also tax-free. So any money that you spend towards your employees' HSAs is actually tax-free contributions, and you don't have to pay the 7.65 FICA or the payroll tax. Now, let's talk about where we've been in 2 years in the past, right? Prior to COVID, 7 different types of water, 3 different types of coffees, and all kinds of fun stuff. It was all cool and dandy. But here's the thing. As COVID happened, people went remote. They're not looking for that. They're not going into the office to drink 7 types of water. I don't know who was still looking for infused water or whatnot. But right now, when we speak with SMB owners, employees are asking for financial advice. They're looking for different kinds of benefits for themselves. And that is a huge differentiation right now in the SMB space from a recruitment and retention. My employer gives me free healthcare or some amount that goes towards my HSA, $1,000 that come to me, or $1,500, and they contribute towards my 401k, and they do this, is actually more important to people right now than some of the other things that we're doing. And we're finding that employers are actually finding this is actually a good way to retain our existing talent and use this as a tool for actually bringing new talent into the pool as well. In the employee's case, if we go to the next one, that's pretty straightforward. I mean, money goes in tax-free, money grows tax-free, and as long as you take it out for a qualified medical expense, and that ranges from anything on a prescription medication and an OTC if you must need one, sometimes you do, to all the way up to other procedures that you may have to undergo at any given point of time. This is where, if you remember, I talked about today and in retirement, you can use the money to pay for it comes in very handy. One of the other best kept secrets of HSAs is this. From the time you enroll into an HSA plan, any expense that you make out of pocket, you swipe a credit card because guess what? Who wants to carry 9 different types of card in their wallet? Or you forget sometimes generally. You hold on to that receipt. You can take a picture or do something with it. And any point of time in future, you can actually pay yourself back. So imagine today being able to have $20 or $100 worth of expense that you needed to do that, and you swiped your card for it. But you don't take the money out of HSA, but you leave those $100 for the next 5 years, 10 years invested in the market. That is definitely going to come out on the right side of it than just taking the money. Now, I understand that's not for everyone to be able to pay larger expenses out of pocket. So I always advise people, if let's say you did spend 100, but you take out 20 and leave the 80 there, maybe take out 50 and leave the 50 there, your next 50 over a period of time, compounding is going to work to your advantage and allow for that. But many people didn't know that you could actually do that. So earn interest on deposits. I'll talk a little bit about triple tax savings and come back to the end of this. And we've already talked about invested. Multiple uses. There are many different ways of using this money. Joe, actually, I was very surprised you actually brought it up in retirement when you covered it. One of the interesting things about it is when you turn 65 and there's money in your HSA that you have not used yet, you can take the money out and you just pay the normal income tax. Imagine 30 years of saving it staying invested in your market, and then you actually paying taxes on it when you take the money out after 65. So you still come out on the right side of this rather than actually having to pay taxes now and paying medical expenses out of your pocket as well. Big difference, FSA, HSA, you never lose it. It is your money. Once an employer has given you the money, that is also your money. So I get asked this question a lot. It's like, oh, if I leave the company after 6 months, what's going to happen? Nothing's going to happen. Anytime any money is being contributed to your HSA, it is yours forever until you take it out or what have you. And there's also portability, meaning in terms of if someone was to pass away and they left some amount of money in their HSA, if they have a designated beneficiary, the money passes on to the beneficiary. So there's a lot of different things where HSAs actually are very, I often say, doesn't make my 401k friends very happy. HSAs are actually better than 401ks in many different ways because the penalties are not there. And overall, as Joe pointed out earlier too, hey, when you do this, it lowers your taxable income. That's definitely something that's very handy. Now, one quick point on 401ks and HSAs. They are complementary to each other. So I'm not saying everybody go put every money in HSA and forget about your 401ks. That's not going to work. But these are complementary and required for holistic retirement planning rather than just looking at one of these in a vacuum. And the next slide is about us as to what differentiates us and why are we here. If you recall from the top, I mentioned traditional providers are banks and credit unions, and they care more about cash with them rather than cash being invested by the employee themselves, right? And so they came up with these artificial constraints. Many of the traditional providers you need to have 2,100, 2,000, 1,500, some random large amount of money before you can invest. And guess what? People forget. Until we had auto enrollment and those kinds of things enabled for 401k, the amount that people are putting in 401k was lower too. And then they came up with saying, okay, somebody wants an investment product. Let's give them just those traditional target date funds. Yeah, you set it and you forget it. Money doesn't work as set it and forget it because inflation is no one's friend. Because eventually it'll come and take your dollar down to 90 cents or even further if it gets that high. So every quarter, being active, proactive about your financial stuff is extremely important. Where we are coming in is we're getting rid of all artificial constraints. First dollar in, you can invest. We are taking away this traditional, don't set it and forget it. Be more proactive about your money. It's your money. And have the whole plethora of savings and investment offerings available to you. You can do ETFs. You can, yes, sure, if you want to do, you can do mutual funds as well. But you can also do other kinds of things. One of the things that we bring to the table is allowing our users to have fractional possible. Imagine somebody 22, 24 years old, having just started their life, being able to say, I want to buy one piece of Apple or Berkshire Hathaway or something like that. We are enabling that sort of capability for people to be able to do that. We can go up to 8 decimals from a fraction perspective for people to buy. And of course, traditional institutions have cared about their own things, right? They spend more on, go swipe your card because they have their business model tied to it in such a fashion. We are making sure that the experience is really, really the 21st century where it's easy for anybody to understand it, because at a very macro level, this stuff is really simple, but it needs to be done and served in a way that anyone, whether they are 24 years old, 42 years old, or 50 or 80 years old, they can very quickly understand the benefit of it. And bringing that native intuitive, what does that actually mean? Many people have cobbled a bunch of different things together. We have brought everything together from the ground up to make sure our investment focus is front and center. And we deliver a service that doesn't make people go from hop to hop to hop. So that integrated sort of experience is what we are bringing to the table for our health savings account. So that's all that I have to say. Again, SavingsOak, the retirement savings platform, catered and targeted towards small and mid-sized businesses. Thank you.
Love it. Love it. So I've got a couple of questions that came to mind as you were going through that. So the first one is, it sounded like if I have my HSA and I have my qualified medical expense, I can snap a photo of that and expense it against my HSA later. Is that correct?
Yes.
So if I've got good income right now, I could almost create a rainy day folder of medical expenses that are just sitting there. And then if I lose my job and I need some money, I can expense those then.
Exactly. So we call it the shoeboxing, and
there's a name for it. Okay.
Yeah, it's I love the rainy day fund concept. It is the concept is there, and that's what's available. You don't have to worry about. That's why we've actually built the mobile app for people to not even worry about it. Right? It's like, oh, okay, I swiped it, and I just take a picture, upload it, and it stays in your account. Later on, whenever you want the money, it stays invested if you don't take it out right away, right? It's invested if you've invested it. And take it, so $20 over a period of 4 or 5 years could be 40, 50, 60 bucks. So today your income allows you to be able to defer that payment back to you. That's awesome, because when you do need it, you can take those $20 back. And as long as you have the record, you're good.
That's brilliant. And then my other question, because I'm thinking through this in terms of thinking through this in combination of a 401k. So if I have a 401k and I'm in retirement age, can I withdraw money for medical expenses from that within retirement age?
From 401k?
Yeah.
Yeah, so there are stipulations around when you can retire, right? So you have to be 59 and a half before the required minimum distribution kicks in, the RMD. After that, you have to take money out of 401k. You're required by law to do that. Okay. But there are very specific things where you can take money out of 401k without a penalty. One rare such case that happened was during COVID times, when the government said people can take loans out of their 401k, provided they paid them back by a certain time, and therefore no penalty will be there. Otherwise, they will be treated as a normal distribution, and then you will have a taxation and a 10% penalty and so on and so forth. Very rarely, and I think if I remember correctly prior to this, there was this notion of you could take money loan out of your 401k to yourself if you were first time buying a house for yourself. It was your primary home. Okay. But again, you got to pay that money back. Otherwise, it's considered a distribution.
And then with in retirement age with this HSA, so with a 401k, when I'm over retirement age, I'm paying taxes on it as I'm withdrawing it after retirement age, right? Mm-hmm. With the HSA, if I'm pulling the money out for medical expenses, am I paying taxes on it, or is it tax-free?
No, tax-free.
So if I'm paying, if I'm of retirement age with a 401k and an HSA, the HSA lets me get tax-free money for medical expenses, whereas the 401k, I'm still paying taxes pulling it out.
Yeah, and you're living your life, right? So in this case of this other person that I mentioned about, who's paying entire Social Security check for Medicare, I'm like, wait, government is giving us from one hand and taking from the other? How does this work, right? But yeah, that's true. That's why I look at it as a complementary thing, where for medical expenses, and let's be honest with each other. As we age, our medical expenses, I mean, it's just natural. We're going to look at those. So if you have a way to pay for them tax-free, and it's sat there for 10, 15, 20 years, depending on how early you start, I always say the best time to start saving money, particularly HSA 401k, was actually yesterday. And the next best day is today. So if you're, because power of compounding, that's how it works. So if you're doing that, it allows you to actually make, have 401k and HSA have the best of the both worlds.
It makes sense. And the way I'm looking at it is I've always looked at a 401k as a tax bet, right? And what I mean by that is a 401k, I'm betting that the taxes when I take it out will be lower than the taxes right now that I'm saving. But that bet is based on two things. One, the assumption that I'm going to stop earning money at some point, right? Mm-hmm. I'm going to retire. And two, where taxes are, right? So one thing we know, taxes continue to increase and the government never reduces them. That you can, if you bet on the government reducing taxes any given year, you're making a very bad bet. So I know the tax rates will most likely be higher when I retire. If I'm not planning on retiring, or maybe retiring later, which is in my case, right? I'll retire when I drop dead. I don't know what else I'd do with myself. I will always earn an income. So a 401k is not necessarily a smart move for me because it's not really tax advantage considering tax hikes over time. So long story short, this would give me an investment vehicle that gives me both a retirement potential income, but also tax-free medical coverage out of my own HSA account at that point, even if I'm still working.
Even if you're still working. And since we're talking so much about HSA and 401k, we should qualify. This is not tax advice. This is not financial advice. If you're listening to this, please talk to your CPA or CFA to get that stuff. I just want to make sure we're clear about that.
My legal heart is.
I thought Sabrina was the lawyer on the call. Thank you for saying that. We are not advising you on anything. And if you took advice from this guy, that's really your problem.
Yeah. You've had what some might call assumption of risk. You have assumed the risk, watching this, that you do not have legal advice or financial advice from Joe.
And this is where I actually look to a lot of people and say, look, two things. If there's nothing else that you take away from this, this is a serious topic. It's also a very boring topic. I'd love to talk all day long about how our APIs, the integrations that we have, our brokerage partner with our bank and that neobank and whatnot, how seamless and paperless we've made this process from an adoption and enrollment standpoint, because that's one of the primary concerns of a lot of the benefits managers and HR managers. We can talk about that all day long, and that is a lot more interesting and exciting as a technologist to me. But the fact of the matter is we're talking about people in a way that it helps them understand where are they going to find this money? How are they going to pay for their medical expenses and retirement? What should they be aware about? And in that regard, to your point, Joe, earlier, is looking at 401k and HSA together. If there's two things you walk away with is like, should I be paying attention? Yes, you should be paying attention. Look at it long term, not in the context of taxes that you mentioned. That will government ever lower the taxes? Yeah, the government does its thing, takes it down 0.25% in 1 year, and then takes it about 2% in a matter of 2 years. So in the long run, you're still going to end up with higher taxes. So don't get caught up on that. And just as true that taxation comment is, it's also a fact that compounding, that's how compounding works. You just have to keep adding to it, small chunks every time. So a lot of people ask me, like, oh, should I max it out? Well, hell yes, if you can, go do it. But if you can't, don't worry about it. It is better to put some amount in both if you can, and start putting whatever you can today so that it allows you to kind of build on top of that. And I always say, just to anybody who's ever bought a house, if you've been fortunate enough to buy a house in the United States, the first year after you buy the house is probably the poorest you are, even though you've just actually made the biggest purchase in your lifetime you ever will. Because you put in everything you got into that house and you're like, okay, how am I going to make the ends meet? And then suddenly second year onwards starts to get easier. You figure out a way to do a readjustment, this, that, whatever. Similar fashion, when you sign up for something like that, think about first year is going to be hard, but then the compounding will take over in the long run and take care of you.
It makes a lot of sense. I think one of the reasons I wanted you to come on the show was if people take away nothing else, it's to go take a second look at your HSA. It's the first thing I did after our first conversation is take a look at how that works, because regardless of whether you're using SavingsOak or your company's using SavingsOak, it's something you can go look at and take advantage of. Which
brings up a good question. So Neeraj, if maybe someone's organization hasn't started working with SavingsOak, can an individual work with you, or how does that work? How do they get onboarded, or what does that process look like?
Yeah. So SavingsOak is SMB B2B focused. We are actually working directly with employers. Makes it easy for the employers to actually come partner with us. But if you are an individual who's got a high deductible health plan or any plan which is HSA eligible and you have some questions around it, feel free to write to us at help@savingsoak.com. And I would be happy to point you in the right direction so that you can take benefit with one of our partners. Or if it kind of works out very well, then maybe something that we can set up with your employer as well. But we're happy to guide people. The goal for us at SavingsOak, our mission is to help people save for retirement, particularly around healthcare. We are a resource. We just look at ourselves and say, I have met with people who've been saving in HSA who've kind of amounted up to $55,000, $60,000, and it's sitting in cash. And I just look at them and it's like, well, it's not your fault. It's basically you're not being delivered the service that you should have been delivered from the get-go. So to Joe's point, if you go back and look at your HSA, if you're a qualified plan, you have an HSA, and you have not invested, you should be doing that tonight, and find out in your system through whoever uses your vendor, how do they enable you to invest? And if they don't, which there are some, we know, yeah, it's a good time. Enrollment season here. Time to move.
So Sabrina, I've been watching the clock closely to limit the time you have to bludgeon me with. But the truth time is here. Who presented it better?
Boy, oh boy. You know, it's I'm feeling generous today. Joe, you did well. I'm impressed. You know, you're getting better. But I gotta tell you, Neeraj, I give this one to you. I mean, it made so much more sense. I think understanding deeper concepts, kind of getting deeper into what are the differences as well. You clarified a lot of that for us. So, Joe, while I am impressed, because this was, I thought you would really botch this one. Thought, hoped, whatever, semantics. But you did a great job. You did a great job.
Thank you. And I think that brings us to the golden rule of presenting any information, and that it's always better to know what the heck you're talking about if you're going to be presenting it.
You know what, Joe? You might be proving us wrong on that point, though. You know, you might be the single case study of why you don't have to know anything to present on it. You know,
BS is my golden power. That's what that is.
Well, be bullish on. I would say be bullish on savings, or be bullish on SavingsOak. BS is right there. So that's always a good thing, and I appreciate that. Now, look, it's thank you, and for anyone listening, whenever you're listening, think about long term, think about savings, think about healthcare costs. None of us is going to be proof from that. We will all have to encounter that. Faster you start, the better it is for you and your loved ones in the long run.
Yeah. I mean, Warren Buffett talks about this all the time. And I think he even said, I'm completely botching the quote, but if he could teach people one thing, it would be around the concepts of compounding interest and what that really means, you know. So I appreciate the time. Joe, sorry for the loss, but you're kind of used to it now. So it's almost like home, right?
Yeah. It's comfort, you know, consistency, if nothing else, right? Well, Neeraj, thank you so much for coming. Thanks for sharing this with our audience. I had a blast doing this. I love the departure from our norm here. So it's been fun.
All right, everyone.
Appreciate it.
See you later.
Thank you. Yep. Bye.